Most of us are familiar with Mamaearth products, and the parent company behind Mamaearth is Honasa Consumers, and they've been making headlines lately, but not for the reasons you would expect. Now, their shares hit a 52-week low right after the company announced its Q2 FY25 results. Now, to add to the investors' concerns, the stock price has even fallen below its IPO price of 324 rupees per share. Now, this raises a very important question. What was so bad about the Q2 results to cause such a decline? Now, before we get into the reasons, let me give you a quick overview of Honasa. Now, Honasa Consumer Ltd is a growing Indian consumer goods company that's carving out its niche by focusing on personal care products that are sustainable and toxin-free. Now, it was established in 2016, and since then it has built a strong identity, especially through its flagship brand, Mamaearth. Now, Mamaearth is also one of India's leading direct-to-consumer brands. They've also diversified their portfolio with other in-house brands like the Derma Co, which focuses on science-backed skincare, and Aqualogica, known for its hydration-focused products. Now, to further strengthen their position, Honasa has also been making some acquisition. For instance, they've acquired B Blunt, which operates both in the products and salon services space, and Dr. Sheth's, a skincare brand that's built its reputation on dermatologist-formulated solution. Now, some of his brands such as Derma Co, Aqualogica, and Dr. Sheth all command a very strong market share. Now, let's break down what's happening with the stock price. Now, when a company's stock price takes a hit, it's usually tied to a combination of financial performance and market sentiment. Now, for Honasa Consumers, their Q2 results did not meet market expectations. The company saw a decline in its revenue by 7% and also posted a loss of 19 crores after posting a strong profit of 29 crores in the previous year. Now, another bigger concern is the growth slowdown seen in the flagship brand Mamaearth that contributes more than 60% of the top line. Now, so what's happening? As we discussed in our business overview, Honasa is a direct-to-consumer brand, which means it initially sold its products directly to consumers through online channels like its website or platforms such as Amazon and Nykaa. Now, the strategy worked well for them as it allowed the brand to reach consumers easily and track sales closely. However, the beauty and skincare market is highly competitive with many brands selling similar products. For example, if you search for something like sunscreen online, you'll find dozens of brands offering similar options. So Mamaearth realized that just relying on online sales wouldn't be enough to keep growing. To reach more customers, the company decided to expand into offline retail, meaning it began selling through physical stores. Now, today, about 35% of their sales comes from these offline channels. Now, selling products online is pretty straightforward. You can track every purchase and make quick changes. But selling through physical stores is more complicated. It involves managing transportation, keeping shelves stocked in many locations, and working with store owners. Now, initially, the company made this process easier by teaming up with super stockists. These are big distributors who buy products in bulk and pass them on to smaller shops. Now, this helped Mamaearth reach stores nationwide quickly. However, it came with a downside. Now, unlike online sales where they could monitor stock instantly, relying on super stockists meant that company couldn't see exactly how much was selling in each store. Now, this lack of visibility caused a problem. Some stores ended up with too many unsold products. Now, to tackle this excessive inventory problem, the company introduced Project Neve, a plan to switch from using super stockists to working directly with smaller distributors in big cities. Now, this change allows the brand to better track inventory and gain more accurate sales insights. However, this came with a caveat. When Honasa transitioned from super stockists to direct distributors, it had to take back unsold inventory from the super stockists. Now, this product returns are typically subtracted from revenue since they represent sales that were previously booked but are now reversed. Now, on the back of this, the company's revenue fell 7% year-over-year, mainly due to inventory losses of 63 crore rupees. However, after adjusting for those inventory losses, revenue grew by about 5.7% year-over-year. Now, so while Mamaearth's growth has slowed, other brands like the Derma Co, Aqualogica are growing well. Now, younger brands are also growing at around 30% year-over-year, improving their overall margin profile. So as an investor, there are a few things to keep in mind when it comes to Honasa. First, fiscal year 25 earnings are likely to be bumpy. The company is making some major shifts in product positioning and how it distributes its products, which will take time to stabilize. Now, we believe it's important for Honasa to focus on building a more sustainable model that can handle these changes smoothly. Second, they need to place the right products in the market. This means concentrating on a focused product lineup that resonates with consumers, especially in the beauty segment where trends and preferences shift quickly. And then there's R&D. This is crucial. Superior product performance isn't just a nice to have, it's a must. It's what keeps consumers coming back and helps a brand stand out in such a competitive space. Now, let's talk about risk. Excessive competition is one of them. There's no shortage of players in the beauty and FMCG markets. Then there's the challenge of execution. Now, scaling up new brands brands is always tricky, and if Mamaearth, their flagship brand, continues to slow down, it could weigh heavily on overall revenues, given how much it contributes to the company's top line. So overall, Honasa's ability to adapt, execute, and regain momentum will be key in determining whether Honasa can deliver long-term value. So what's your take? Temporary setback or structural challenge for Mamaearth? Do let us know in the comment section. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.